Welcome to The Real Build. I am your host, Bill Ryman, your broker builder. And today I got a special guest, a local guest coming from Naples, Florida, where I'm currently at. So we couldn't do it in person though, because I don't have the video camera set up, but we are doing it right the way we always do here on The Real Build. His industry experience has taught him to take the time to understand his customers. What's their story? How can he help them in the pursuit of a home? He sees customers as real people with real goals, needs, and dreams. He gets to match them with the best loan product and create a truly seamless lending experience. He is a younger, up and coming mortgage lender, local to me, like I said, and that's why I wanted to have him on. Kyle Larmy, welcome to The Real Build. How you doing today, man?
Man, I'm doing great, Bill. Thank you seriously so much for having me. It's an honor.
Yeah.
I was actually going through your podcast, and you've got over 100 podcasts, and I
Yeah.
see the types of construction projects that you're doing. I don't know how you've even been able to do that, but I'm happy to be like number 110.
Yeah, no, man, I appreciate you coming on. Yeah, it's been quite the journey. I get to meet people like yourself. Obviously, I've had a lot of great guests on, so it's been more of, something just to help people. Like that's why I
Mhm.
want to do this. I don't get paid to do it. I'm not advertising. It's just been kind of a passion project to me because I like having guests like yourself. I see your content. I see how passionate you are about helping the client, not just
Mhm.
putting money in your pocket. And that's kind of the same thing I've had with every single guest on my show. They're just passionate about doing the right thing, helping the client, exceeding expectations. So I saw that with you. Also, that you're newer to the mortgage lending game. I've had some
Mhm.
people on, past people that, obviously, the mortgage geek, me and you were talking about him prior to this. He's had a lot of experience. So I wanted to touch on with you kind of that newer, going into mortgages. I've had newer up and coming realtors on and builders, and now I
Mhm.
want to hit the mortgage level with you. So with that being said, though, who is Kyle Larmy?
Sure. Well, he's a great guy. I consider myself, really a professional, not so much like being professional all the time. Like I definitely, um, I'm very, uh, an easygoing person, I guess. Like I feel like a lot of people in our industry, real estate agents, lenders, they're real stuffy, and
Hmm.
just, so I guess I would say, I'm a mortgage lender. I'm just, getting my business rolling. I'm coming on my second year being a lender, and I'm all about service, right? Service and relationships is huge to me. So any way that I can, meet somebody and really truly help, like having, a service attitude, being of assistance any way I can, that's pretty much who I am.
Yeah,
Hopefully you're, go ahead.
no, go ahead.
I was saying, hopefully you're a lender for life, is my idea. So I want to take care of people and be there for them as we move on to, do more transactions.
Yeah, no, I love that. And you being new to the industry, what caught my eye with you is obviously your content. You're trying to help people with it. You're doing as much as you can, a ton of it. And I've been obviously paying attention, and that's why I wanted you to come on this show too, because you're doing it different. I mean, like I said, I had the mortgage geek on here. He's doing a ton of content too,
Mhm.
and like yourself, you're both doing it to help people and just change the way of how people look at lenders and gain that trust with people too, because you're in a job where you got a lot of competition. I mean, it's been a crazy market out there, obviously, too. So but you're making yourself stand out. Obviously, I saw you, and I have appreciation for that as a younger person in the building world and in the real estate world too, because I mean, content is key too, and you're doing a ton of it and a great job at it, so I got to give you some credit for that.
Yeah, appreciate that. When I first started in the mortgage business, I had never been to Florida before, and I had an opportunity to come to Florida.
Hmm.
So, speaking of marketing and social media and, just brand awareness and being top of mind and meeting people, it's been critical for sure. Just like you, I think I met you through Instagram, through a
Hmm.
mutual, I think somebody that you had on the podcast, Derek. my buddy. He's, the content king.
Yeah.
But yeah, marketing. I came from the car business.
Okay.
I think I heard in one of your
Yeah.
podcasts that you were in the car business too. Where I didn't even have like Instagram, social media up until about 2 years ago. So yeah, marketing, branding, big time. It's
Yeah,
important.
I relate to you big time. Obviously, with the car business thing too. I mean, that taught me a lot of what I know now. Obviously, when I was in it, I wasn't really content marketing or anything like that. I don't think that's how old I am. The iPhone didn't even exist. I think that it
Mhm.
came out the year I was doing it. So, uh, but I learned so much being in that business and how to take care of customers, follow up, so on too, which I'm sure that was key with you as well.
Yeah, absolutely.
Yeah. Yeah. So let's go into, so why did you choose to be a loan officer out of all industry, every industry? So why shift from the car business into loan, doing mortgages and so on?
Yeah, I was in the like car sales industry for about 10 years. So I started as a, green pea salesperson, got involved with like the internet department, being internet sales professional, and then running like the internet department. So handling a lot of leads and doing really well. I excelled very quickly in the car
Okay.
business. After like 3 years, I got into the finance department. So I was an F&I manager, finance and insurance. So I started, I guess my first taste of lending and understanding, how that process works of, putting contracts together. And I just kept excelling. I think in my third year, going from like, drop out of college, not really have, a lot of skill sets to get into, high income and high professional jobs. I made my first 100,000 my third year. And then for 7 years on, I just kept growing and finding new opportunities. But the closer I got to the pinnacle levels, like the general manager position, some of my
Mhm.
friends that I was working with started getting into what we thought was the dream job, and just seeing it's always a toxic environment being in the car business. I love it, but there's also, a lot of negatives around
Mhm.
that. But it's like the hours and the lifestyle and the expectations, the constant pressure. You got to, hit the number, and doesn't matter what you did last month. What have you done for me lately? What are you doing now? And none of that shit matters. Let's go, go, go. And then seeing my friends get those positions that I wanted, and seeing the stress and just the blame, and just like you can't put a price on, like there's no amount of money that's worth it. So in my last year, I was running the number one store in Houston. It was a Nissan store. I was a new car director, and I loved that job, and I loved being a sales director because I had a team of sales managers, I had a team of finance managers, I had 60 salespeople, and it was a lot of fun in that way. But the hours, you never having a
Yeah.
Saturday off for 10 years. I was fortunate enough to know somebody who, for about a year straight, my last year, just kept hitting me up, trying to recruit me, trying to, say, hey, he was in Virginia at the time, but he wanted to grow a team in Florida, and he was in mortgage. We had similar interests. Like, he knew I was a Grant Cardone guy. He knew that I was, like a sales um, hustler, I guess, and he wanted somebody like that. But I was doing so well that I just, it was like planted in the seed in the back of my head, and I never pursued it. And then one day, I think I was at the dealership till, like 1 o'clock in the morning with a new salesperson, trying to get the last deals like towards the end of the month. And every Saturday you have a sales meeting, you're there at 8 o'clock, and I'm running late, and the GM's like, hit me up like, hey, asshole, you're late. Like, what the hell? And this guy hadn't been to work in 5 days,
Yeah.
and it was just like, it was like a snapping point, basically. So I went into the sales meeting. I waited for him to finish, and I respectfully, resigned. I told him I'd give him 2 weeks, but there's no such thing in that industry. They just basically escort you out. And I packed up a car, and I went to Florida to get a mortgage. To answer your question about why, I don't know, my little sister was getting started in real estate and seeing a lot of success. Being in finance, I always was interested in real estate, and the numbers. It's like the same type of field, but bigger numbers. And really the allure of having my own business and getting started and being able to work remote and, and work for myself versus, like a car dealership. It was just very interesting to me. There was a lot of mystery about mortgage. Like I knew I was interested in doing that, but I could never really figure out, even though it seems like there's a mortgage loan officer every, 5 minutes away. I mean, I have 20 of them that are my friends that are all in this market. Being in the car world, I didn't know what it was, but I knew like being a mortgage broker, like that sounds interesting. So I went to Florida and I basically did a ride along with this guy. So for 2 weeks, I just kind of watched him work. I'm like, all right, so, what is it? Like, what's the job? And I just sit and watch him work in his office. And you just literally like, laughing, talking to people, getting calls, sending emails. And, it was so cool. It was so interesting to be able to work for yourself, have a real business. And, half the things that I love about what I do, because I'm so lucky, it's like such a fun job, but half the stuff I didn't even realize getting in. It was like I was just drawn to it. I had an opportunity. I got into it. I didn't even know what I was getting involved in, but every layer I peel off, it's like, I can't believe that this is a job. This is awesome.
Yeah, I mean, you always, as you always got to do what you love, and obviously, the more you love what you do, you're going to be even better at it. And I can relate big time to you on the car business, man. I was in the similar situation, going to training, doing all this stuff to be a GM, or not a GM, but a manager. And I was young at the time, and I just kind of looked around. I had that moment. And I was like, okay, you can make really good money, but do you want to be in the car business forever? And it's like you said, I never had a Saturday off. I remember I was like 21 at the time. I turned 21 at the time when I was working there, and I was like, I had to make an excuse and tell him it was my uncle's. I forget, my uncle's birthday or something, for my 21st birthday, just to take some time off. So it was it's definitely a tough environment to work in, for sure, and it takes a lot out of you, especially young and older. And I see where you're coming from, though. I didn't love it. I mean, I loved the money, and the money was good. I was selling a lot of cars, but at that time I was like, nah, I can't do this any longer. So give you good obviously, and like going back to what I was talking about too, you definitely learned a lot, I'm sure. It
Oh
taught
yeah.
me a ton of experience. It taught me just how to pick up the phone and call people, cold calling. I mean, they hand you a list and call all these people right now. And yeah,
Yeah.
definitely, it's a lot, man. But I give you credit for that. I mean, let's talk about you being new to the mortgage loan industry here, because like you said, there is a lot of people in your industry. You have a lot of competition you're going against, and you kind of have to figure out how to have a leg up. So, how are you standing out from the rest of the officers out there? What are you doing different to help your clients and stand out? And because this podcast is all about like showing the client what to look for in the real estate and building industry, and obviously you're part of that general real estate and construction area. So how are you standing out? What are you doing to better the client experience?
Yeah. Well, the first thing to stand out is just having excellent, service and having that referral side. I mean, the best feeling ever is taking care of somebody and, getting that wow, and then having them, share your information with other people and building those relationships. I mean, a couple things that I do specific. Number one is I don't have I guess like an ego about how I need to act. Like I try to be very real. There's not a lot of fluff with me. Like I have real conversations. My referral partners are friends. Like sharing memes and things like that, and not having to be so professional and so professionally produced. I feel like that helps because, just being a real person is important. Like I do see a lot of people that it's just it's too stuffy, so I try to be relaxed. And marketing's big. I mean, coming from the car business, it's all about sales, closing, but what I found getting into the real estate industry and being a loan officer is it's really like marketing is everything. Like sales, it's important. Like you got to execute really. Like for me, marketing is the promise and the attention, and then sales is the execution. So you still need to, have your systems in place and be able to, walk people through making decisions and following up. I mean, the basics of, running a lead-based business. But that is, sorry, I'm getting a call, so let me skip that. But that's big, and I just try to like the market's changing. So being young and new and going through the pandemic and seeing the virtual and seeing like the basic, boring, watered down newsletters, like all the things that are available to me as tools. I like video is massive. I use BombBomb, which is, a pretty popular software. I mean, I send video emails constantly just to try to be effective and stay top of mind for those clients who are on the fence or, maybe considering their options. But also to help my real estate agents who refer their business to me, just to keep them, top of mind and try to set them apart. Yeah, I'd say those are some of the things that I'm trying to do to stay different.
Well, that's one of the main things you said there is just being real, being yourself, and then just not being like that stuffy. No offense to somebody that goes to work in a suit every day, but
Mm-hmm.
being that guy that's in a suit that this is here, and it's just I've dealt with lenders, and you got to have a relationship with the lender that you deal with because it's a long process. I mean
Mm-hmm.
not as long as building a house like myself, but there's a lot of stress related to it. You need so much. I mean, you feel like you're giving a lender your whole life, with all
Mm-hmm.
the paperwork and everything that constantly gives them. So if you can create that friendship with them like you're doing, and send them a video instead of just sending them just an email saying, hey, this is what I need for this and this. Maybe you send them a video saying, hey, glad to get this process going, blah, blah, blah. Great to be working together. Here's how I can help you. Let me know if you can, if you want to meet, blah, blah, blah. So, I think with our generation too, you're seeing that shift to where people are really taking, and it hasn't fully hit yet, but I think by you doing your content and your marketing the way it is, I think it's going to really excel you in the future. I mean, it could be 1 year, it could be 5 years from now,
Mm-hmm.
but you're going to excel more than the person that was just word of mouth. Let's put it this, or sent out a newsletter or whatever. And that's why I'm doing so much content. I'm probably the only
Mm-hmm.
builder in the area that's doing content as much as, but people see it. You don't think they see it. I've said this in past episodes, but they do see it. They pay attention. And a
Mm-hmm.
lot of the customers I have now came to us, pretty much majority of them, because they've seen my stuff, maybe listen to a podcast, whatever. So, there's been times with this podcast, I'm like, why am I doing this? I need to stop. We all have those thoughts. It's like, what's the point? But then you just get that satisfaction of somebody saying, "Oh, I love your podcast. I listen to it every week. It helps me with this, and this." I'm also helping other builders too. So with your
Mm-hmm.
content too, you can be helping other mortgage professionals as
For
well.
sure.
So I like what you're doing. Like I said, and just like you've talked about on the friendship side of thing, that's how business should be. You're creating
Mm-hmm.
friendships. You want things, you want somebody to be treated like a friend and not just as like a client. It's a huge difference, and especially when you're in a longer process, 60 days or 45 days or whatever. You need to kind of continue that so their reaction back to you is a calmer, better reaction to because I mean, you're on edge when you're getting a mortgage, man. You know that too. You got to deal with, you're like a shrink, you got to talk people off the
Yeah.
ledge quite a bit. Don't spend your money here. Don't do this. I'm watching everything you're doing. So,
Yeah.
pretty much,
So
right?
funny.
So, It's yeah, I love what you're doing, man. And being younger and newer too, like I said, I think it's a big difference, and I think that's where and it happened with me in the car business. Being the younger guy, I stood out too,
Mhm.
and I think that's in every business. People, believe it or not, like to deal with somebody younger that looks, like I've talked about it in the car business. When I sold cars, people would walk up to me, and we had like a next in line system, but people would walk right up to me because I was that 21-year-old guy that, was not that slick back car salesman with the gut and
Mhm.
smoking a cig. So, it's just impression is everything as well. So, another one thing I wanted, this is one thing I brought up at the beginning, and I want to talk to you about this coming from your angle, being new to the industry. I mean, we're in a market right now that is a little crazy.
Mhm.
Obviously, the real estate market is nuts. I mean, it has been. It may be cooling a little bit because of lack of inventory and so on, and people kind of getting back to their daily lives and not sitting on Zillow or Realtor.com. So, but I very wary of what's happening. I mean, you see it on the bank end. I've seen it on the building end of materials. All that continues to rise. Labor continues to rise. I talked to 4 different people yesterday, and they all said they're having labor issues, or they got to pay a
Mhm.
lot more money to get workers, or they're getting their workers taken by other companies for higher wages as well, which is going to affect the total cost of everything. So let's talk inflation. What
Mhm.
are your thoughts on that on the bank end? Obviously, I know you being in the industry, you kind of have to stay on your toes about it. You're they're obviously not planning on raising interest rates anytime soon. What do you
Mhm.
think? What are your thoughts on that? Let's go into that.
Yeah, sure. So I know I was just reading today about the CPI that came out for last month. The numbers came out, and of course, it's one of the biggest spikes that's happened. I think in 13 months for
Yeah.
CPI. As far as the housing portion of that, it went up 15%. Just the housing portion of the
Wow.
CPI, and that's the biggest jump in 30 years. So obviously, inflation is it's like inevitable. I mean, it's kind of sad because it all has to do with the money supply, right? That the Fed's printing. We have
Hmm.
the pandemic. We have all this, a new round of easing because we've been printing money for 10 years. We've been keeping rates low for so long. And obviously, the lower the interest rate, the higher the value of the property can be. Just looking at monthly payments, you probably see a lot more of the specific inflation because of building a house.
Hmm.
But even in the grocery stores, right,
Yeah.
there's prices are going up for everything. Like uh I saw when that oil pipeline hack happened, and oil prices spiked. Almost like a conspiracy theorist, because whether the hack happened or not, prices are going up on everything. Um, as far as inflation, now it's supposed to be a transition. It's supposed to be like a temporary thing. I saw that our Treasury Secretary Janet Yellen she just admitted in the minutes of the last meeting that it's actually going to continue. They think it's going to end, right? Which I don't always. I've seen the Fed say things that didn't happen plenty of times. Not to be negative, but now they're admitting that, okay, wow, this inflation is real, and we're actually expecting it, for the months, moving forward, but it's going to go back to normal. But even the way that they calculate the CPI versus like the way that they calculated it in the 70s, who knows what the real inflation numbers are. So when I see those government numbers, obviously they're nice indicators, and we always try to keep track of them. Same thing with the bonds, like 10-year bond. I look at that more than my Instagram page on a daily basis, especially with how volatile it is, like the treasury bond yields. It's crazy, but one way that inflation is affecting or can affect the housing market, and I have this conversation a lot with people that are buying houses or buying their first houses. Hey, I'm worried about buying the house, if it's a bubble and then the value is going to go down, and, should I wait, or, buy versus rent, that kind of thing. And the nice benefit to actually getting, buying a home and owning it is you're locking in your cost of living
Mhm.
versus rent, because if the economy crashes or if values go down, even if there's a 15%, which would be huge, a correction in the market or housing, that means people lose jobs, they lose the equity. It turns into a lot fewer people are going to qualify to buy a house, and
Mhm.
in turn they're going to be forced to rent. So if there really was a bubble coming or some kind of correction, even if you bought a house and you lost equity, let's say your house goes down 100,000 in value. Well, if your primary reason to buy a house is to speculate on the value, you want to buy a house because you want to sell it to somebody else at a higher price later, that works until it doesn't. But it shouldn't be your primary reason for buying a house. And if you find a house that you can live in comfortably and be okay living in it for 10, 15 years, because a lot of people only live in a house for 5 years and then they flip it, they take their equity, or at least that's what they've been doing and it's working. But you're still, no matter what your house is worth, nobody can take away your mortgage payment. Maybe your insurance can go up a little bit, like some of the utilities of the house, but the true loan and that 3%, rate, whatever you're locked in at, nobody can take it from you unless you miss the payment. Whereas rent, if the amount of renters doubles, even not counting inflation, just looking at supply and demand, if people are, struggling, losing paychecks, a lot of people are a paycheck away or two from, bankruptcy. So if you're trying to rent a place and there's a rental shortage, which we're already
Mhm.
seeing now, talking to some of my real
Big
estate
time.
agents, well, rent could be double in 3 years. Like with the way that we're printing money, I mean, who knows? You're completely vulnerable to that. So I guess one way that's you can hedge and protect yourself from inflation is through home ownership, because not guaranteed, but if you can borrow, $500,000 at 3% for 30 years, like if I was the lender and you asked to borrow 500 grand, but you promised to pay me 3% over 30 years, I'm not going to take that deal.
Mhm.
Because after 30 years, I mean, who knows how much more money is going to be printing. We were supposed to be done printing money, before COVID, and speaking of the Fed and saying, hey, we're printing this money, but we're going to, pull back, and we're going to be tapering, and we're going to be, you know, shutting down our balance sheet. And, it's crazy to me, um, how the government and the Fed getting involved causes these things, because rates are definitely artificially low, and if our economy has been improving as much as it's been and house values are going so high, well, truly, then we should, as a country and a people, be able to afford a higher interest rate. But realistically, we can. I mean, even 1%, if people were complaining about it 3.2, well, if it went to 4.2, it can really change things. So fortunately, I guess the Fed's keeping us going, but who knows? It's a hot topic for me for sure.
Yeah, no, I love it. And I want to continue to talk about it because it is so important to all things real estate and construction wise, too. I mean, I got people texting me about locking in construction loans and so on. And I mean, I can't do anything until I bid out the project and get them a firmer price on it. But it's people kind of are like, all right, when's the rate's going to go up? It's got to happen. And like you said, it is crazy how much the government and the Fed, they mess things up quite a bit in the past history. But I think now, because we're so used to lower interest rates, it's kind of been engraved in our mindset that that's the norm. But I mean, what, in the 19 was it 70s or something, they had 20 something percent interest rate, I think, during the Jimmy Carter era and stuff like that. And that
Hmm.
was nuts, and now we're at 3%, and so interest rates were always higher than they are, obviously, that we've been accustomed to, but it will cause stress to the market if they go up 1%, but 4% on an interest rate still isn't that bad.
For
It's
sure.
it's really not that bad, and it would help things quite a bit, but they also got to stop printing money. I agree with you there. So,
Mhm.
in your opinion, keeping this going, obviously, do you think we're in a bubble and multiple bubbles and all different asset classes and on top of real estate, stock market, and so on? And also, where do you see, in your opinion, because you follow this a lot more than I do? I follow it a lot, but I'm sure this is your job. So I'm more looking at the lumber prices. Where do you see interest rates being next? But within, are they going to change them this year? Do you see that happening? What's your take on that?
Well, yeah, I'll tell you exactly what the rate's going to be next year, Bill. Just kidding. Your
Crystal ball.
listeners are lucky. Um, you know, besides the interest rate changing, which, you know, it could go either way for sure. But another thing that happens, and it's been happening, is no matter what the rate is, the government can still step in and control the market and the cost of home ownership, even besides the rate. For example, one thing that happened, and it really started happening before March 2020, before the pandemic, but bond yields were falling crazy fast. And when I say bond, I mean the US Treasury bond, because most mortgages are pegged to the 10-year Treasury bond. And the stock market was getting really nasty. They were having some really bad days. And when the speculative asset classes like stocks, when they start doing bad, people pull their money out because they get scared and they try to put it in something safer. And the
Hmm.
mindset of a typical investor is, okay, stocks are too risky. I'm going to pull it out and I'm going to put it in the U.S. Treasury bond because, of course, the bet on the United States, that's a safer bet. They're not as volatile. Well, so many people were buying bonds and the values were going up a lot, and it was causing the yield to crash. I mean, we went from like 1.75, which is the yield. So if you loan the United States government, let them borrow money for 10 grand, they're going to pay you a yield. And so the higher the value of that bond, the less they're going to pay you to own it because it's valuable. And when it gets ugly and they want more people to buy it, as the bonds go down, they're like, the market says, hey, we'll give you a higher yield. Like, please buy back the treasuries. Well, when those bond yields crashed in February, March of 2020, a lot of people that already had mortgages there was a huge refinance panic. And I'm like a couple months in, and I'm working with a very, long time mortgage broker, and I'm seeing like the panic. People are
Hmm.
just like, hey, give me the rate, give me the rate, give me the rate. And it was like, everybody's trying to jam it in and lock it up before the rates change. And the lenders were all like, I mean, it was taking 3 months to close a refi. Turn times went crazy. Nobody had the infrastructure. And then the pandemic happened. So all the underwriters are working remote, and it's just a shit show. Well, the government came in and they started adding lender level price adjustments where they're basically saying, hey, if you want to refinance a loan, you can have the rate, but we're going to charge the lender to sell it to the government agencies after the loan closes. We're going to charge an additional fee, additional tax for all those. And they just did it recently again for anything that's not a primary residence. So now if you're buying an investment home, a second home, anything like that, you're going to the lender who's going to give you the money, basically, they're going to have to pay a higher fee, half a point or a point, to sell that loan if they're not going to service it. And the same thing with like mortgage insurance. There's things that besides just the rate, everybody wants to know the rate. There's different factors and different things that the government can step in and do at any time, depending on how the market is, to try to govern it, basically, or gauge that. So Um, as far as interest rates themselves, a lot of the money that we're printing right now, or the Fed's printing, are being used to buy mortgage-backed securities and
Hmm.
treasury bonds. So we're basically printing money to prop up the US bond, to basically artificially keep the interest rates low, because there's not a lot of people buying the bonds. So, let's print some more money, and the Fed will buy the bonds to keep it going and keep the treasuries low. That could stop any time, if they decide to stop printing money. Um, but it doesn't seem like, right now the Fed's happy to step in anyway to keep we keep like getting to the end of the road, and it's like, okay, we can't print money anymore, and then some crazy thing happens like COVID. It's like, okay, we'll kick the can a little bit further down the road. The point is, the we spend more as a government than we bring in.
Yeah.
As just, I mean, if the United States was a company, right, or a person, they'd be bankrupt, because you got to make more than you spend, and our spending's out of control. um so again, fortunately, they're printing money, but it just, it's frustrating. It's like a shell game, I feel like. So as far as rates, they're very low right now. Every day they change a little bit, but it's, people ask, what's the rate? There's so many factors that go into that interest rate. But they I mean, there's some countries that are all the way at zero. A lot of
Yeah.
it has to do with the economy, and we're so close. But I always tell people too, and a reason to lock in your rate when you're in a position where, hey, do I want to gamble? Is my loans closing? Do I want to float my rate or lock my rate? um, they could go down a little bit, but if they go up, we're so low right now. I mean, one CNN headline and it can change. We can go, up 2%. I mean, we've seen so many crazy things happen just in the last 2 years. So
Yeah.
we definitely keep an eye on everything and try to give the best advice possible. But it's a lot more than just the economy. It's like the Fed and just everything that's happening.
Well, with the mass printing of money too, you look at that aspect of it, it's sinking the US dollar value. So where should people convert cash into? I mean, real estate's a heck of an asset to do it. And if you
Hmm.
follow all the big players that are out there, the Bill Gates, the Bezos, those type of guys too, a lot of them are buying real estate at this time, and they're putting their money into real estate, saying they're going to utilize it as something, but I think they're just converting the money into real estate, so it's a safer
Hmm.
asset because the dollar is sinking because of all the printing going on too. So that's what, another topic to get on too is yeah, putting your money into real estate could be a better bet rather than risking it on uh crypto or a different, I mean, there's so many different assets now that we're seeing: NFTs, crypto, you're seeing real estate. We've always had real estate, then you got all these other collectibles and so on, which I've kind of put my money in everything. I'm a crypto advocate. I love what,
Hmm.
if you actually understand Bitcoin, I was trying to sell my dad on it the other day and he's like, I'm not buying
Hmm.
any imaginary thing, but it's when you have a deflating dollar, it's like, where do you put your money? And real estate is a safe bet, but real estate also is government controlled as well. So you just never, I mean, it's always good. It's always been the best investment you can make, and a lot
Hmm.
of people don't understand that. They say, I'll just rent. Like you said, you brushed on that.
Hmm.
I can just rent, but the rents are inflating. So, it's just going up and up, especially around here where we're at,
Hmm.
is it's just insane. I mean, I was even thinking about selling my house because I bought it a year ago and I could already make
Hmm.
good money on it. And then I face a capital gain. But then I was looking at rentals and I'm like, these are way over what I'm paying on my mortgage. It's
Hmm.
insane, so
Yeah.
it's like, and then you're getting a crappy house, small house or you can rent a 2 bedroom apartment for it's like, it's nuts. And I have 2 dogs. That's another thing. So, pet ownership, it's hard to find somebody that's going to let your pets in there. So like
Hmm.
you were saying, I think with all that's going on, I do agree with you that real estate is definitely and prices are high, and that's preventing people from
Hmm.
doing it. I think now, well, it's priced a lot of people out of the market. I should say it that way. There's still people wanting to buy, but that is an issue. People are afraid to buy because they think it's all going to crash down.
Hmm. Yeah, I get a lot. There's a type of, I guess, millennial first time home buyer, but they're like the smart kind of engineer, on a personality level. They say, hey, I don't want to buy yet because I'm nervous about the value. But aside from government charges and things like that, another thing is, right now as a first time home buyer, you can put 3% down or 3.5% down on an FHA.
Mhm.
Conventional loan, you can get 3% down as a first time home buyer. Or if you're a low income, if you make 80% of the AMI, like the area median income for where you're buying in, if you make 80% or less, then even as a non first time home buyer, you can put 3% down. They give you discounted mortgage insurance. I mean, there's great programs out there. You can still do USDA zero down. Back in like the 70s, the 80s, it's like the American dream is work hard, save your money. And when you save up a ton of money, then you go put, 20% down, you buy a house. But now, dude, speaking of the car business, there's loans that I don't know if I could get a Nissan Altima loan done based on the rules of what's required to qualify with the auto lenders. But a mortgage, it's a perfect scenario. 592 Beacon, 3.5% down. But those programs, it's like another version of stimulus
Mhm.
because they don't have to, the 3% and 3.5% down FHA, those exist not because the lenders allow it, but because the government agrees to back those loans and they agree to allow that to happen. But if all of a sudden houses aren't going straight up and it kind of levels off, or if there's a 5 or 10% reduction or correction, the government's not going to continue to allow people to buy a house with 3% down,
Mhm.
because if they know next month you could be 10% underwater, it just won't work. So those programs could always go away. But it's different from the '08 because we're short on inventory.
Mhm.
Um, and it's like related to inflation. It's just the cost of you go to the grocery store, and like food prices, and it's because there's, on a very basic level, there's more dollars.
Yeah.
If there was $100 total in the world and it was just me and you, Bill, we split it 50-50. Well, we've got half the world's money supply. But then if next month I say, hey, now there's 200 in the world and I gave 100 to my uncle, well, now we just went from 50 to 25. It's just this like domino um, effect, basically. So it's fun to watch, but interesting to keep up on and, see how it all unfolds.
Yeah, and hopefully it unfolds in a positive way. But I mean,
Mm-hmm.
just like when there's mass printing of money, and it just never ends up good. So, and
Yeah.
people, I think people are starting to smarten up to that a little bit. And on my end, I've been seeing on the my real estate end, I should say, I've been seeing a little more wait and see what happens approach. I still have
Mm-hmm.
people that are wanting to, buy something now and there's just no inventory, so I'm waiting for stuff to pop up. But I'm also seeing houses sit on the market a little bit longer. They're not selling in a day anymore, and
Mm-hmm.
then there's more inventory starting to pop up, and we're still really really low, and I'm sure it's the same in every other area. But I think people are starting to hold back a little bit, which that's usually, I was talking to a broker about it today, and he's like, that's usually kind of the beginning of where things start kind of slowing down and trickling down too, because he's
Mm-hmm.
seen this back in, before the last crisis happened. And it's not going to be a mortgage crisis. I'm not saying that, because I think the banks obviously smartened up quite a bit with who they're giving money to. It's very hard.
Mm-hmm.
It's not easy to get a loan. You know that. You deal with it in your daily life with people.
Mm-hmm.
So it's like you said, though, it is interesting. And yeah, that's why I wanted to have this conversation with you, because you're very knowledgeable in that too,
Mm-hmm.
for sure. So
Oh,
we'll get back on your kind of you with lending too. One thing I wanted to ask too, what is there a benefit to working with a local lender versus an out of state lender? Now, I have a lot of customers out of state. They have friends that are lenders and they use them up north versus somebody local. And I always recommend working with local people, especially
Mhm.
on the lending side, the attorney side, just because Florida law is Florida law.
Mhm.
There's a lot involved in it. So let's go into that a little bit here.
Yeah, I mean, number one, you're supporting a local business,
Hmm.
which is just I like to do. I'll go to a local coffee shop over a Starbucks any chance I can, just to invest my money back into that local economy. So that's always helpful. And yeah, I mean, the Florida laws are crazy. I mean, I'm not from Florida, but learning it, like the condos, and
Hmm.
realizing that basically 95% of condos in Naples are not FHA approved, and trying to help people understand that. The lenders from out of state, I've definitely gotten business, rescue deals, you call them, where, the limited condo review, and a lot of the laws. So for sure, every state's going to be a little bit different. Time zone sometimes becomes an issue if you're working with somebody moving from California, and, 3-4 hours different. um, Reputation is important, so working with somebody local that's with a company that's been around is helpful. And communication, right? If you're calling, if you're a listing agent and you got 6 offers on the table, and you're looking at pre-approvals, and you're looking out for the best interest of your selling clients. Well, if I'm a listing agent, I'm calling these pre-approvals like, hey, so where are we at? What did you collect? Where are you at in the process of pre-approval? Has it been run through the automated underwriting system? If I'm a listing agent and it says, thanks for calling New Jersey Credit Union for one, para servicio dial, you're just not. So that hands-on local, working with a mortgage company that only does mortgages, we're not doing CDs and, auto loans. It's super helpful, and having hopefully somebody that either you have a personal relationship with, or your real estate agent has a personal relationship with, because I can't tell you how many like three-way calls I have with my real estate agent and their client, and like three-way texts, and just
Yeah.
it's like a team. You have a team versus some bank that, the buyer's agent doesn't know, nobody knows except for, and the person trying to buy, they're trying to get an update, and the bank's like, yeah, everything's fine. And, they don't care about the relationship. If I blow a deal, you know, my peers, find out about it. I lose a relationship. I got to
Yeah.
see that guy, I'll lose sleep over a problem on a deal. Whereas a credit union with, 12 employees all doing a different part of it, it's just a number. Like, they're going to be fine. They're going to get paid their salary regardless if the deal falls apart. So those are, I guess, some of the biggest important reasons.
Yeah, it makes a lot of sense. What you said is huge because it is a team effort. I'm big on the whole team working, everybody
Mhm.
working hand in hand, especially on my real estate end. You get a good lender, you got the good realtor, you got the good title agent that's going to close
Mhm.
everything out. Everybody's on the same page, communication, communication. I talk about that all the time. One thing, just to keep moving here because of time, I wanted to ask you because it just popped in my head, why don't, and I'm trying to switch this up with you compared to the other past mortgage professionals I've had on, and I've always wondered this, why don't most banks or most mortgage lenders take on construction loans from ground up? What's the reason? I don't know if you're not doing it too. It's been a question that always runs through my mind. Obviously, I got builders on here and so on. Credit unions
Mhm.
usually the one that's doing it locally, like Michigan Credit
Mhm.
Union. They do a lot of our construction ground up stuff because nobody else will touch it. So
Yep.
what's the reason?
Yeah, well, we actually supposedly, I'm with Cardinal Financial, who's
Okay.
amazing, and they've got really cool technology that we use to process our loans, and they've got a construction button. And there's a
Okay.
rumor that next month we're supposed to have a construction to perm program,
Okay.
but a
Nice.
lot of those programs went away with COVID.
Okay.
And me, I guess, speculating is that they don't want to get stuck in the middle of a project, and then, the lumber can't come in from China because of, some kind of COVID issue, or, work sites get shut down because the workers can't be there. So I know a lot of the construction programs that were available a couple of years ago. It's even worse now after COVID. A lot of those programs got shut down. The requirements got real tough. Like I know some lending companies in our market here, they've got a construction program, but if you look at the program and the requirements, it's just it's not the deal. But man, probably the other thing is just there hasn't been as much demand for it, I imagine, until COVID. I wonder if we're going to get banned from even saying the C word on your show. But because of that happening, like I wonder how much that's affected by it. But because everybody wants to build now because there's no houses to go around. So more and more people are considering it, and through probably social media, they see the construction, they see a guy like you, and they're like, oh, I'd just rather do that. And they don't understand that those loans they're tougher to get and not as plentiful.
What about the lot loan, combining the lot loan and the construction loan? Because I know that's rare with banks too, and why they won't do that. I know there's probably more risk to it, but I know, for example, like a credit union, they're willing to take something on like that. So why is a credit union willing to do it and not a bank too? Because it has been tougher to find. I mean, would I work with somebody like you on construction loans? Absolutely, but most people like yourself aren't doing them. And then I go back to the current person that I'm working with, and they got that team of 12 that, my customers don't get that one-on-one attention to detail like you yourself offers too. So I'm just curious, and maybe you don't know the answer to this question of why, it's so limited to a credit union. And maybe I could probably find it. I don't know, but I've always wondered that.
Yeah. I mean, just with how fractional reserve banking goes, and they have a certain amount of deposits or their clients' cash, these credit unions, that they have to go out and loan that money out. Gotcha. And maybe in that community, maybe they're more willing to do it because number one, it's controllable, they're in that area, but also they have more pressure to get that money back out there into the marketplace. And that's probably something that they see an advantage to, but I'd love to know that too. I've been asking, for my own place of business to come out with that. So we're really excited to find out, what the deal
huge.
is.
That's why I don't understand why a lot of banks don't offer programs like that. Cause I know the one I'm using is definitely they're doing really well with it as far as how much people are wanting to do it, because when the interest rate's so cheap to build a house, it's like, why not? And that's what I'm getting cussed. Like I just had a text before we got on here, and he was asked, well, I need to lock in my rate. When am I going to know pricing? When will we go to contract? I'm ready, blah, 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 because I need to get it to the bank for a 60-day, whatever lock and so on. So it's interesting to me that more banks don't do it, but I guess what my thoughts are is probably more of a risk because you're doing lot and build. But if the person has the financials and can show that, what's to make it any different than them buying a house? Because you got to show your whole life to buy a house anyway. So you know what I mean? So it's always been a question to me too. And I don't think I've ever really gotten a solid answer on it because that's the higher ups, I guess.
So many moving pieces, it's always safer to loan on a home than a car because you can't hide a home somewhere in a garage somewhere, and builders could run out of money. I mean,
that's
getting
true,
the permits, like
builder can run.
All the getting the COE and, it seems like when the lenders come out, they're probably they should have preferred builders, that they know can execute, because if there's no house built and they got to go foreclose on it, well, they're going to be bummed because there's no house. It's like, oh, cool, we have this dirt lot for the value of a home.
No, that definitely makes a lot more sense too, because it is more of a risk because a builder, if he goes under and he walks and then the project's halfway done and they loan the money, because I know they loan in increments too, is what they do, kind of in a draw schedule as well. So I don't know. It's always been curiosity to me because I know banks, obviously banks are in the business to make money and they can make a lot of money doing it. So
For sure.
for sure. So we're getting towards the end here. I mean, me and you and I can go on for hours with all this stuff.
Mhm.
Let's talk about kind of one thing I saw that you had was mortgage lending is more than selling loans. It's about helping people achieve their home ownership goals, whether that's helping them reach a better financial position or connecting them to the home of their dreams. It's about guiding them to the finish line. So explain this a little bit to me and why, how this can affect a client and what you're doing to stand. We talked about you standing out from other agents, but let's talk about your process a little bit.
Yeah, it's just like educating and being available. I obviously you have my cell phone number, so I'll take calls on a Saturday night. Like I'm not too good or too busy to be helpful there. And yeah, it's definitely relationships. I understand. It's not about the transaction. Even if I can't help you, or we're looking at a refinance and I'm going over options and it doesn't make sense, or you find a better deal going through your retirement account, Merrill Lynch, they have a better alternative for you. I'm still going to follow up with you and make sure that I'm available for you, just to be a real person. So we did like part of my process. I'm sending out questionnaires to people just to try to learn about them, and just that being a friend, being able to assist at any time, being fully available, and just trying to come at them with a spirit of service, like not sales, service. Like, how can I help you? Really, whether we do business or not, I want to help and hopefully become friends with you. And how can I help you, kind of thing. So just try not to be so transactional, for sure.
Yeah, no, I love that, and just like we talked about, being more of a friend rather than just somebody that you're doing business with. Them, chalk it up, and you're out of there.
100%.
So, one thing also I wanted to ask you too is, what should a customer's main concern be with working with a mortgage loan officer? Is there any concerns that they need to look out for? Hidden cost that they need to look out for too? And not saying that you're doing this, but
Hmm.
if they are hiring somebody out there, because obviously there's listeners from all over the country, or all over the world, I should say. What should their main concern be? What should they look for?
Yeah, so definitely shop, right?
Yeah.
Like the TRID or Dodd-Frank, like there's new documents that are required in any mortgage. There's a loan estimate that legally you get 3 days after applying for a loan. When you have a contract, you're going to get a loan estimate, and you're going to get that same looking document 3 days before your closing. And it's called a closing disclosure. So you have a loan estimate and a closing disclosure. Well, when you get that loan estimate, you can send that to another lender or two and just compare. I mean, the most fees are going to be standard, like the state, the taxes, the escrow, your homeowner's insurance. Doesn't matter about lender, but you can definitely look at points and rates. I mean, right now, a lot of lenders, the big lenders that are going IPO and becoming publicly traded companies, they're advertising, rates. And obviously the algorithms know when you're shopping for rates, you're scrolling through Facebook and you see, hey, 2.1%, but it's not, I mean, it's really deceptive almost, but it's like a 15-year mortgage with 25% down, paying 3 points up front. And people don't realize that. But real advice, and I get family members that are friends that reach out to me and say, hey, I'm doing a mortgage, not with you, but can you look at this and help me? And it's like, again, spirit of service, no problem. Let
Yeah.
me show you. I'm going to go over the rate. I'm going to go over the fees, like the processing, underwriting fees, and the points. The points right now in this market is big on the mortgage side, because a lot of people are paying points and not even realizing it until the very end. When what can you do?
And when you say points, just like what do you mean by that? Just so the listener knows.
Yeah, so if you qualify for a 3% interest rate, you can pay a fee which is really interest up front to
Mm-hmm.
buy it down. You can
Okay.
buy your rate down. Just like if you qualify for a 3%, you can take a higher interest rate and get a credit back. So a lot of times an interest rate will be advertised at 2.25%, but they don't realize up front in that advertisement or in that initial conversation with who they're working with that really their rate's 3.25, but they're being sold the interest up front in cash, right? So their closing cost
Okay.
is an extra $10,000 at the closing table because they're giving that money to the lender up front to get a lower rate. So it's not necessarily that they qualify for that low rate, but it's because they're being sold that rate by paying the interest up front, which isn't always a bad strategy, but you want to understand that,
Yeah.
because everybody's different. You just like not everybody needs a 30-year mortgage. Well, not everybody, if your intention is to buy a starter home and after 3 years sell it and upgrade, well, then you shouldn't pay $5,000 in interest because it normally takes you, like if you spend $10,000 in interest and it saves you $100 a month, you got to do that math. Like how many years is it going to take me to recoup that $10,000? It's $100, and then how many months afterwards? So there are benefits to paying points or buying the rate down. I mean, it's tax deductible. I mean, you can
Mm-hmm.
get a lower rate. So there's strategies there, but you should be fully informed so that you can make a well-informed decision. So just, look at those loan estimate documents. It's a, government required form for consumer advocacy, just to make sure that it's a level playing field. So, read and understand those forms and work with somebody that's going to truly like walk you, through that.
Or just call Kyle and he'll be honest with you and walk you through it and do it the right
100%.
way.
Yeah. I mean, if they told you you had a brain tumor or, you had to amputate your arm, you would probably talk to one other
Yeah.
specialist or one other doctor, a second opinion, and it doesn't cost anything to shop. Just make sure that you get the same offer, in writing. So, but I never mind my clients shopping, and I get a lot of real estate agents, that refer me to clients that, hey, can you take a look at this? Make sure they're, getting the best deal, or make sure this is the best option for them. And, can you compete?
Yeah, nah, that's great information too. Because I mean, people should ask questions, shop a little bit, just talk to the people, and feel them out. I mean, you're gonna know when somebody's on. Like, the older you get, the more you learn people and how if they're
Mhm.
gonna be honest with you or not, or if they just want your money or to make money off of you. At least you should know too. So that's where people like yourself come in and honesty and doing the right thing for sure. One
Mhm.
thing, I mean, one thing before I wrap this up with some personal questions, I'm trying to debate which question I want to ask you because we can go on for another hour if I ask you both of these. The refinance thing, I asked the last mortgage professional that I had on this show, and he kind of gave me his 2 cents on it. I want yours on it. So, people are refinancing obviously because the lower their rates or maybe pull some money out. What's your opinion on refinancing? When should somebody do it? In your opinion, should they
Mhm.
do it just to lower their rate? Certain percent. I mean, because he on when I spoke with him, he kind of said, yeah, if you're going down to 1%, it makes sense. But if you're just pulling money out to pay off credit cards and stuff like that, that's another story. So, what's your
Mhm.
opinion on refinancing? When's the right time to do it?
Yeah, I've had three different financial planners do cash out refis,
Hmm.
probably in the last maybe 6 months or so, maybe a year, which is weird because like the Dave Ramsey type and the financial planners are not about debt, but if you have consumer debt, in my opinion, it is a no brainer. If you don't have the ability to pay off that debt, you got $50,000 in, credit cards, and you're paying 10, 20, 30%. It's like I mean, debt can really, crush
Hmm.
somebody. And if you have that equity available in the house, in my opinion, it's a no brainer. And I love those debt modification, style mortgages, because you can make $1,000 of monthly payment go away
Mm-hmm.
by adding $30 or $40 a month to your mortgage. I mean, the math is unbelievable. They give people room or breathing room that are, have just not, maybe not even struggling, but just that credit card and consumer debt. If you have equity in your house, it's a huge opportunity for almost like a fresh start that you've earned by, home ownership. Refis, I hear the 1% rule. It's not that easy, but a lot of it is, it's like, it's a cash flow thing, right?
Yep.
So if it's tough because everybody's so different. There's so many different types of
Yeah.
refinances out there. So, we do refinances to get rid of PMI. We do obviously the cash outs. We do it to shorten the terms. Hey, I only owe 150,000 left on this. Let's tighten it into a 10-year. I want to get rid of my escrows, things like that. But if you're in a position to qualify, definitely consider doing it if you're waiting for the rates to go lower. Like if you know in your heart that you need to do a refi for whatever reason, don't be greedy thinking that you want a 2.5 or something, because it can very quickly go away. Or we can see the government step in and start charging more fees to protect the lenders from the early payouts.
Mm-hmm.
I think that answered. Was there another part
Yeah.
of that question, Bill?
No, that was good. Yeah, because you do get mixed opinions on it, and
Mhm.
I mean, if you're gonna refinance to help yourself in a way, yes, it makes sense to get you out of debt. It makes sense to, yeah, if you want to lower your payment, and you're gonna be in the house for a little bit longer too. I mean, you're still gonna pay the interest no matter what, but it's a opinionated question. It really is too,
Here's
for
the other
sure.
great strategy, in my opinion. If you've got some cash equity and you pull that cash equity out to go buy an investment property,
Yeah.
specifically a rental property. Um, I mean, right now with how cheap you can borrow money, and how little your monthly payment on your current house is affected by pulling 50 or 100,000 out to turn around and generate, five or 600. I mean, the rental income right now is insane just on
Yeah.
a 12-month lease, let alone like some of the vacation rental like Airbnb. I mean, some of my investor clients are absolutely crushing it, and that's been a strategy that a few people were using to take that cash and buy rentals.
Yeah, that makes sense. That's definitely a way to do it too. And I've debated doing that, but now everything's too is so high. It's like,
Mm-hmm.
it's tough to do. I want to, like I said, I can keep going, obviously because of time too. I try and keep these around a certain time now, but want to get into personal questions. These obviously is questions I've been asking every one of my guests, a little more personal touch to it, a little more motivation. What about you personally? What lessons have you learned throughout your journey that we should all apply to help our businesses or our own lives to help us
Mm,
grow?
man, definitely. You know, work hard, focus on relationships. Move. Like sometimes, especially getting started when business is tough and you go 2 or 3 days, like a lot of times just if you sit and wait, then it kind of passes you by. So just keep moving. And recently it's been a lot of like personal brand stuff, and just with where the world and the market's going, just try to talking about content. And as dumb as saying social media sounds, like people are going to become extinct in business if they don't get on the wave of being found online. So those are definitely some good pieces of advice. And probably just as cliche as it is, make sure you're doing what you enjoy. Because man, for me, I've never going to the car dealership and waking up to get to a meeting at 8 o'clock in the morning. It's like, I know I need to be there, but it's like, man, I got to go to work. But this is like, I mean, I love waking up and going to work and getting on the phone and working deals and making solutions and connections. So, that's a real one. Enjoy what you do for sure.
Yeah, I love that. Everything you said right there for sure. Just I mean, it is about enjoying what you do. It's about putting in the work too, like you said, and content creation these days is key. I mean, that's how
Mhm,
I ran into you. You ran into me. We see each other's content, and
mhm,
you know, you're doing a good job at it too. And it's so important because I do agree with you. If you're not doing it now, you're going to be lost later
mhm,
on. And I think it's coming quicker,
mhm,
you know, rather than later, sooner rather than later, just because it's so important. So many people are online now too, and seeing
mhm,
and they learn. I've said this in the past too. They learn who you are before meeting you.
mhm.
Saves you time, saves them time. Because if they don't like you, they're not going to meet you, and they're going to see that in your video. I don't like this guy. What an idiot, you know. Which is
Big
better off
time.
for you because when you meet them, if you guys are going to butt heads the whole time or
Mhm,
whatever, and it's not a good relationship. So it helps a lot. Love what you said there. Another thing I always ask about people always ask about your past. Let's talk about the future here. So where will we
mhm.
see Kyle in the future? 5, 10, 15, 20 years from now? Who will you be?
Sure, man. Well, in 10 years, I'll have a big team, and hopefully my system and process will be working to a point where I'll have the freedom to help. Like, I definitely want to help. I love training, teaching, coaching. Like, my favorite part about the car business was just having my sales people there and just having a team with good culture. So, I'd like to have a company like that, and try to assist in as many parts of the real estate process as possible, and hopefully being in a point where I don't need to be anywhere necessarily to pay my bills, and I don't need to charge anyone for my time, so that I can hopefully take what I've learned starting today and 10 years later, and try to help somebody else. And yeah, hopefully probably have some kids and a family in 10 years. We'll see what happens, but just loving what I do and just probably still here.
Awesome, man. Awesome. And then last question, what this show's all about. What exactly do people need to look for when getting or hiring a mortgage professional, and why should they choose Kyle Larmy as their loan officer of choice?
Yeah, I mean, you definitely want to try to talk to a few people to see who you vibe with, and who you feel comfortable with. Like, after a while of meeting somebody, if they have good intentions or not. But work with me because I'm local, I'm young, I'm hungry, I'm committed, I'm like available. I don't get paid until your deal closes, just like your real estate professional. And I don't I don't care like the loan amount or your credit score or what you're trying to do. Like, I love, helping a first time home buyer, getting three different gifts from three different family members, just scraping it all together to buy, their dream first home and Lehigh Acres. And just like, it doesn't matter to me what, a lot of lenders are either too busy or just not interested in some of the, even smaller deals, and they'll kind of pass. Or I'm not like a condescending person. I love, trying to figure out what your needs and goals are and getting you all the information that you need to make a well informed decision. And it's no pressure. It's fun.
Hmm. Yeah, for sure. Well, you sold me today, man. So I'll be
All
sending
right.
some people your way for sure. And if anybody wants to connect with you too, where can they find you in case they do have questions or they want you to look at, one of their mortgage proposals that they got too? Where can they find you?
Yeah, so you can always find me on Instagram. That's probably my favorite social media at Home Loans in Florida. Easy way to find me. Call or text me anytime, 520-499-6966. And my office is in Coconut Point, Estero, Florida. But
Okay.
we're on the Fashion Square area with all the shops. So we're like Ruth's Chris, Tommy Bahamas. We've got a beautiful balcony overlooking, like the shops in town. So you can find me there. And then we, of course, we lend nationwide. So every once in a while, you'll, see me in a different state, with some of my real estate partners. But yeah, that's pretty much it. Call, text, DM me, Google me, and reach out to me anytime you need anything. Thanks so much, Bill.
Yeah, yeah. No, Kyle, this has been awesome, man. Just it's what we spoke about, man. I'm happy to have you on and just get kind of your perspective, and especially being a little bit newer, even though you don't act
Mhm.
newer to the industry too, because you got a lot of knowledge, and you're killing it right now, and I'm sure you're going to
Mhm.
crush it in the future, man. So I
Yes,
appreciate your
sir.
time. I know you're a busy guy, so
Not at all. Thank you. Have a good one.
yeah.
Always available.
Yeah, thanks guys for listening. So everybody that's listening, obviously I don't really ask for anything but one thing, and that is that you go on iTunes, 5 stars only. That's all I allow. Comment, share this with your friends and family, and I will see you guys on the next episode.